Have somebody look at your policies, have somebody go through them and just review them, because what was good for you 2 years ago isn't necessarily good for you now. And there can be some places where you can cut. There can be some gaps that you need to know about, because at the end of the day, insurance is about transferring risk. You need to understand the risk first. And if you want to expose yourself to that risk, you certainly have that ability in that prerogative, but you got to know the risk before you can decide if you're going to absorb it or transfer it. So it's a great industry. There's a lot of great people in the industry. I think it gets a bad rap because of, the war on drugs in the 90s, and then what spirals into that. And cannabis is here to stay. And I think it's going to be, now that the market has settled down a little bit, I think you're going to see a lot more M&A, and I think you're going to see the strong survive, like in any market.
Welcome to A Higher Law, a cannabis podcast from the Dykema law firm. I'm Lance Bouldry, leader of Dykema's Cannabis Industry Group. For more episodes, you can find us by searching A Higher Law wherever you get your podcasts. Today, we'll be discussing the wonderful world of insurance, and I have with me Pete Vredeveld, who has been operating in this space for quite some time and is helpfully going to offer some insights into what the insurance market's doing and what licensees can do to really minimize their costs on what can be one of the most expensive items for businesses. We'll talk a little bit about those industry trends. We'll talk a little bit about Michigan's Cannabis Regulatory Agency and some of the positions they've been taking, and then briefly about some of the federal changes that may be occurring and what might be happening there. So, Pete, why don't you kick us off with a little discussion on what you're seeing in the insurance markets today and sort of how things have evolved over the last several years.
Sure. Thanks for having me. I appreciate the opportunity. Michigan didn't do us a ton of favors early on. With the attestation, what that brought in was limited market. So there was two markets when they originally started the insurance and cannabis in Michigan, and those two markets were Conifer for your attestations and then also SARFA for the attestations. The problem with that is nobody else wanted to jump on board with the attestations, so now you really limited your market for property liability and work comp to Conifer if you wanted them to do the attestations, or you could go somewhere else, but then you had to buy your attestation from SARFA. So immediately that shrunk the market space and reduced the competition. Competition drives down price. So in Michigan, on that property liability and attestation, those are arguably some of the highest rates in the country.
Does that continue to be the case now?
We being Michigan, picked up probably 2 years ago another company that could do an attestation filing. And what we really wanted to do when we did that was, Conifer's got some capacity issues. I think they'll readily admit that they don't necessarily want the market share that they have. They also, for a time there, other carriers had capacity issues. So you would build out and say, eventually I want to be vertically integrated. Well, once you get vertically integrated and you have heavy property load, large sales numbers, 10 million or north, you ran out of capacity in one market and had to go to another. Well, the second you went to another market for your increased growth, they didn't have the attestation. So it was a catch-22. So we brought in another carrier. QuadScore Trisura does a real good job with attestations, and they handle the larger property loads and the bigger companies that are vertically integrated.
Great. Well, for our non-Michigan listeners, could you maybe give us a little background on what the Michigan attestation requirement is and why it's problematic?
The MRA at the time, and now the CRA, decided that they wanted to come out with a financial responsibility filing that would give an unencumbered, unendorsed policy for product liability of $100,000. Non-existent in the market space when they hatched this idea. Unencumbered, unendorsed. I mean, you're an attorney, you know how that works. They almost never do that. So now trying to find a carrier to do that. Well, the carrier that they came up with this idea together actually did the attestation in Conifer. And so everybody flowed to Conifer. And then that's what created the initial problem with not having enough markets. And so now you're at a point where Michigan really needs a couple more markets. And that attestation is tripping them up. So really, for everybody outside the state of Michigan, attestation is nothing more than a financial responsibility filing. I think at one point, everybody said, well, we're going to have a whole bunch of operators here that don't want product liability and won't buy it. So we're going to force them to buy it by doing an unencumbered, unendorsed 100,000.
Yeah, and that unencumbered, unendorsed issue, I mean, I think that really illustrates yet again a point we make on this podcast repeatedly, which is you had legislators acting in this space without any real knowledge of the practical implications of what they were doing. So that attestation requirement sort of flows out of a statutory requirement unique to Michigan that all licensees carry $100,000 in adulterated product coverage. So in other words, you can have somebody who's altered the product after manufacture. You still need to be covered for that. Or you could have had an employee engage in some intentional bad conduct. Well, you still need to have insurance coverage for that. All of those typically, of course, would be excluded. Those types of things. So, have you heard any chatter within the state about whether that attestation requirement may change as the state undertakes new rulemaking, or are we kind of stuck with it by virtue of what's in the law?
Yeah, I think we're stuck with it for a while. And again, I think that does hinder the market. There has been some softening of pricing for that one market that all they'll do is the attestation, which allows you to bring in some other markets that maybe everybody recognizes from the West Coast, which would be CanAssure, CanGen, those markets. They just won't do the attestation. So it's helped a little bit that some of that pricing has softened a little bit, but it's still, we really need to either get rid of that attestation filing, or we've done our best to try to educate the insurance company on it's really no big deal. We're not hanging you out to dry. This isn't some nefarious plot to cover something that you wouldn't normally cover. It's really the key to get the license. You have to have the attestation and prove the financial responsibility. So,
yeah, it's been a challenge, and I think one of many here. With those other companies coming in, I assume sort of what's happening here then is folks are going to one of the few carriers that offer that $100,000 adulterated liability insurance, and then they're getting the rest of their insurance products liability included from another carrier. Is that what we're seeing?
Correct. Yep. And so you can do it that way. It's when you're small and first starting out, that is way too expensive to do it that way.
Sure.
So then everybody funnels to the one carrier that'll do both. And then as you get bigger and as you can go, it doesn't even have to be vertical integration. You just have to have enough property load and enough liability exposure to warrant jumping to the next carrier. And luckily we have pulled in a market that will do the attestation filing and be able to handle those higher property loads.
Yeah, I think one of the fun issues we always run into as attorneys too is that you have a state system and a state requirement, but you often also have municipal insurance requirements for the local license, which include things such as $2 million of coverage, naming every city council member as an additional insured, and some of these sort of, and having real limitations on what types of companies can service those policies. Mm-hmm. So what are sort of some of the emerging trends or maybe other areas of coverage that you're seeing in the industry? I mean, you're seeing D&O coverage being available, or why don't we talk about sort of what's on the horizon? Sure. and what's new?
Sure. Well, first of all, if you're talking softening, work comp is probably the softest line in Michigan. I'm still trying to figure out why the insurance companies go, oh, we won't do anything in cannabis, but we'll do your work comp. I mean, I'm not sure there's a logic there, but it's in the benefit of the people in the cannabis industry, because not only in Michigan, but across the country, seems to be more and more work comp carriers jumping on. There is a lot of products in cannabis that are young products. And what I mean by that is there just hasn't been enough years to figure out what these products need to cover or what they should cover. A perfect example is outdoor crop coverage. I would find it hard to place that coverage in good conscience, trying to think that there's going to be any coverage at all, because the ag companies look at cannabis as the ugly redheaded stepchild in the room. So they're not given the same coverage on crop that they would give to somebody else growing a completely different crop. So the example is we ran into one where I'll just give you some ballpark numbers. Just say there was $5 million worth of crop in the ground on their farm. The insurance company wanted $500,000 to insure it with, I believe, $100,000 deductible. You're already looking at me like, wait a minute, these numbers don't add up. It gets worse. So we start looking at this policy and we start breaking it apart, and we realize that it's only for a set number of months in the growing season. And inside of those months, there's limitations on date to date, if they're going to cover hail, if they're going to cover frost. They're not going to hit the outlying dates because they know that's where the frost is going to occur. What ends up happening is we looked at this particular policy and then we did some research because, I mean, there's just so much data available. We went out and said, okay, it's this county in the state of Michigan. How often has a quarter-size hail event happened? 3 times since the 70s, and all of them were in the 70s. So now you got to ask yourself, why are we spending the money? And so that's one example. D&O is another example where it just needs some more traction in cannabis. D&O has an A side, which covers your individuals. And I think that's a really good thing because, you know, there was a time where everybody was getting into cannabis because everybody was going to make millions on it. And so investors were throwing money at it. And then all of a sudden, bam, the market drops out. Investors don't have their money. Companies that buried their company and walked away, the CEO, the CFO, they're coming after them potentially. And if they come after them, the A side is going to cover them. It's going to cover, you know, it's going to back them up from an attorney standpoint on anything that happened. The C side is the entity side of it. B side just reimburses A, but the C side of it is the entity side of it, and that needs some more work. You know, there's some companies that come to me and say, well, I just got a new investor in. He's the CEO of a Forbes 500 company. He wants to give me $5 million, but he says we have to have D&O. Okay, we'll go buy D&O. Just know that little blanket D&O makes him happy, but that doesn't mean that the entity is going to be covered. It still goes back to, hey, now that guy that's the CEO of the Forbes 500 company, he's coming after you and he's suing you because you buried your company and he had 10 million in the company. So that's where I try to, because this stuff's expensive. I mean, cannabis and everybody's going to go, yeah, tell me about it. Everything in cannabis is expensive. So every provider has got to try to work to go, wait a minute, this is just another product. It doesn't have to be sat over here in the corner like nobody wants to touch it. Learn it, understand it, and drive the price down.
Yeah, I guess I'll amend your statement a little bit there of everything in cannabis is expensive, because certainly what we've seen in Michigan the last few years, in California, and in other states that were ahead of us on the curve is everything's expensive in cannabis except the cannabis with the price compression we see. And you know, one of the things we see coming out of that, certainly as lawyers, we do see the investor suits. Maybe not as many of them as we would have expected at this stage, but certainly you have people who come in, are looking at irrationally exuberant pro formas, making investments based on that, and then turning around and claiming that they were defrauded because the company had no real belief or basis to think that those numbers could ever happen. Do you see coverage extending to individual board members in that kind of instance where you've got fraud allegations or?
Yeah, I mean, you just have to, you can set that side A up the way that you need to cover the people that are fiduciaries in that situation for sure.
Good. When you talk about sort of the outdoor crops coverage and some of these other products, new products being hard to price, hard to find, what do you think is the real driver of that? Or the bigger driver of that? Is it federal illegality still? Or is it, as you pointed out, I think a couple minutes ago, a sort of lack of actuarial history? I mean, we just don't know what kind of claims, what kind of crop claims will be brought.
It's a combination of those and other factors. And I think, when cannabis first came out, I don't know, 90%, 95% of the insurance market went, nope. They just didn't understand it. They didn't know it. You're taking something that was illegal and making it legal, but you're not making it federally legal. You're making it legal in each state. And so that immediately gets rid of most national carriers, most national Main Street carriers, I would say. As far as actuarial history, yeah, I mean, you could go back and ask some of these legacy operators what impacts a plant. But again, those are legacy operators. They weren't in the confines of an insurance policy. And the actuary people inside of an insurance company, they're the ones that hold the purse strings on everything. So it's probably a little of both. Yeah.
What do you think needs to change, or what big changes would help drive costs down? Is it just getting more carriers in, or are there some structural statutory or regulatory changes that'll really make a difference?
Well, the one regulatory change that would help Michigan is getting rid of the attestation requirement. I mean, I think there's still a way that you can require them to have liability coverage without making it an unencumbered, unendorsed policy. And then, yes, that will then free up additional markets to come in. So it's again, it's kind of a both and we see this also in product recall. I saw a policy out there for a closed loop operator. So they grow, they process, they distribute, and the product never leaves their care, custody, or control. They're not going to get product recall. They're not going to have a product recall. But yet they bought a policy for $175,000 to cover $1 million product recall with a $50,000 deductible. And I'm scratching my head going, who told you this? And, we go through that whole explanation. The distribution channel for cannabis is also difficult because this is usually how it goes down. And this is kind of how we got into cannabis. You say, I'm going to start a grow operation, or, hey, go big. I'm going to go grow, process, and distribute. Well, I got another business, so I'm just going to call my retail agent that I have and down the street or in downtown Lansing or Grand Rapids or wherever. They don't have the expertise, so they call the broker in Chicago. The broker in Chicago goes, oh, yeah, we got these two markets. You can do this and you can do that. I'll set it all up for you and I'll give it to you. And then the retail agent calls his customer and he goes, hey, good news. I got you insured. He has no clue what's in it. None. I mean, some of the basics, property liability, but he does not understand, or she doesn't understand, the inner workings of how cannabis reacts in a cannabis insurance policy. And that's where we found the opportunity. We have, a lot of, hey, I'm going to jump on the cannabis bandwagon and I'm going to say I'm an expert in cannabis insurance and I'm going to put it on my website. But then when the nuts and bolts happen, I'm not a cannabis expert. I'm going to the guy in Chicago. And the guy in Chicago, for Michigan, he doesn't understand Michigan fully either, which is an animal unto itself. So that's kind of how we got into it and how it's got to this pinch point where there's only a couple of markets.
How often, when you go in and do sort of a review of policies for an existing operator, do you find some significant cost savings? Is there a lot of overpayment going on, like people with crop insurance or product recall insurance that don't have product recalls?
Yes, and so that's an easy pick-off, right? The ancillary coverages, the D&O, the product recall, the crop insurance, we can pick on those all day long. But what also happens is in cannabis, it was exponential growth. So you start out and you have this policy that's costing you $25,000. You renew the next year before the audit comes through, and it's still $25,000. And then the audit hits you for $75,000, and then they increase the current term as well. And the operator's going, he's calling his retail agent, the retail agent's calling the broker, and everybody realizes there's a problem because what happened was that policy was a small business type policy, and they left it sit there. The agent didn't follow up on an exponentially growing company to go, hey, we have to watch it here because you've got exposure that you didn't have before, or you've got a heavy audit coming that you have to prepare for. And that's where we find our opportunities there.
Yeah, it sounds like there's still just a need for a massive amount of education in this space. I think we find that really with respect to every type of service. But what I'm hearing from you is we need to be educating the insurance agents and brokers as much as we need to be educating their customers, the cannabis licensees. What about cannabis regulators? Do you see some sort of misunderstandings there frequently? A need for education?
Yeah, I mean, I believe wholeheartedly so my best customer is an educated customer. So first of all, I've got to be educated in what I'm bringing to my customer. As far as the regulatory agencies go, there's only so much expertise they can have in insurance. So bringing somebody in, whether it's at the carrier level from Conifer, CanGen, whoever, or bringing a couple experts in that are retail or wholesale brokers or agents, I think that goes a long ways. There's just some things going on with landlords and, okay, I'm my own landlord, so I set up an LLC over here, and the state of Michigan says we can't put that LLC on that policy because we want the operating entity to be on this policy, and you can't put that on. Why? Well, there is one justification for that I can think of, and maybe there's more than one, but the one that I can think of is both those entities are on one policy, you get sued together, and now you got to split the limit. Well, the simple solution is that just buy excess layers of liability to the point at which everybody's happy. So there's ways to sidestep it, and I think sometimes that the regulatory agencies just don't understand that it accomplishes the same thing without creating a mess on the operator side, because you get some of these operators that have 10, 15, 20 stores. Now all of a sudden you're issuing separate policies for everything because I don't want this name on that policy, but there's no clear direction as to why.
Yeah, it's been sort of one of the frustrations here too. It's very much. I mean, we're all on the learning curve, right? I mean, it's one of the things I find most fascinating and enjoy the most about this industry is I'm going to learn something new multiple times a day because it's just evolving that quickly, and nobody can know everything in this space. But it does seem we run into some issues as the agencies continue to learn. Where they're sort of playing catch up. So, and they're not necessarily doing so in the rules. So we've had circumstances in the insurance context where we've been told, landlords cannot be on as an additional named insured. Nobody can be. And when we push back on that, a few months later, we get, well, here are the exceptions. Landlords can be on there. The local municipality can be on there. And here's the few, but none of this is ever in any sort of publication. It's not in an advisory bulletin. It's not certainly in the rules, but we're all sort of trying to figure out, why would all these locations need a separate policy? Why would we need separate coverage in a lot of these cases?
Well, I think you also they've created a situation where, okay, the landlord, so we'll take the case where the landlord's you. So you have an operating company and you have an LLC that owns the building, and you say, well, I can put that landlord on, which is me, as a additional insured, just not a named insured. That doesn't give them first dollar coverage. So now the only way the landlord, which is you, has coverage if they get sued is if the operating company gets sued along with them. If the landlord has a lawsuit all on his own, somebody never stepped foot in there, they happen to be walking along on the street, tripped and fell, the landlord gets sued, they don't have any first dollar liability coverage. So what we've done to temper the folks at the regulatory agencies is if you've got a policy that you own the building in this LLC, operating company over here, we just separate the two. The problem is that does create a little additional premium, not a ton, but a little. I mean, every time you add a policy, there's additional cost. There's an easier way to do it, but we've kind of gotten to the point where just tell me the rules and we'll follow the rules. If there's no way to follow the rules, we'll tell you. But the rules keep changing.
Yeah, I think we're going to go through a rulemaking process here in Michigan shortly again that hopefully will address some of these issues a little more clearly, where everybody's got a chance to weigh in. There are just a couple other kind of specifics I wanted to talk about in terms of where there's perhaps some significant lack of coverage or concern. Let me back up. So I'd like to also talk a little bit about some other types of insurance that maybe come into play here in Michigan and certainly in other states that I don't know if it's necessarily being required or whether valid coverage is being obtained or not. One of the things I'm thinking about is delivery vehicles. We certainly have lots of dispensaries in Michigan. You have the ability under the law and the rules to have delivery. It's got to be performed by an employee of the dispensary that's delivering product. But I tend to see sort of the same thing I see with the cottage and pizza guy, which is here's a college kid who's got his own vehicle and now he's kind of slapped a sign on top that says such and such cannabis or he's unmarked. But people are using personal vehicles in a lot of cases here. What do you see as concerns there? I mean, are those guys ever going to be covered by their own auto policy? I would expect that it would exclude illegal use.
The easy answer is no. Let's go. I'll give you the example of the pizza delivery. They even screw that up. So I'm a young kid and I'm using my car that's probably titled to my mom and dad. I'm not calling. My mom and dad don't even think, I don't think, to call up the insurance agent and go, hey, is my kid covered if he delivers pizzas in the car? Because the answer is going to be no, unless you get it endorsed for business use. Can you slide around it? It depends how bad the issue is, right? A fender bender, no problem. You run over the neighbor's kid, all bets are off. And so now you translate that to cannabis, and you have to have personal auto insurance that's going to cover you for the delivery of cannabis. That's going to be a really tight window and almost an impossible one to find. And the mom and dad are probably going to go, I'm not tripling my cost just so you can go deliver cannabis and make $15 an hour, whatever the number is. But in addition to that, the company then has to have hired a non-owned auto on their policy because they don't own that auto. you do, your parents, if you're the delivery person. So what we're also seeing is a fleet of vehicles owned by the cannabis companies. And that's okay. But now you're down to really one market that in Michigan that even does it fair at all. I mean, the last one that I looked at, it was 5 vehicles and they were just Equinoxes or something like that. Nothing, it's not a big, heavy load exposure or anything like that. I looked at their premium and it was like $3,100 a unit. I'm like, that has to be way out to lunch. It has to be way too high. There's no way that's right. So I call up another carrier that says they do cannabis delivery in Michigan. He said, well, the one I just got in, the person said that they had to be $9,500 a unit, and the other one was $14,000 a unit. That is 10 times what it should be. And they're just gouging people because they can. So there is one carrier in the state of Michigan that will do that, and they'll do it at a nominal price, but it's still going to cost you, $3,000 a power unit. And that's just ludicrous. I mean, we do long haul truckers that are maybe only 5,000 or 6,000, and that exposure is just way greater. So there's a big need for somebody to step in and go, we can do this. It's really not a whole lot different from a pure auto exposure alone, whether you're delivering cannabis or you're delivering a pizza. The exposure is the same for the auto carrier. What people want to concern themselves with, which has nothing to do with the auto insurance, is I get robbed. That's a different issue. That's actually potentially a work comp issue. Well, work comp's easy to find in the state of Michigan, right? I mean, I got beat up and somebody took all the stuff. That's an easier exposure than the auto policy. I don't understand. Sometimes, this is my 32nd year in insurance, and I still have a hard time understanding what insurance companies think sometimes.
Well, as the father of a lead-footed 16-year-old, $3,100 a unit doesn't sound that bad to me.
Fair. It's all perspective.
It's all perspective. But certainly once you wrap it into multiple vehicles and a business expense, it's a whole different universe. Well, Pete, I've really appreciated our time with you today. And Olivia Van Dyke's your company's been great to work with. We've had wonderful success with that. Is there anything else you want to add or things that we didn't cover today that bear mentioning?
I would say if any of the operators, they just haven't looked at their policies in a while, have somebody look at your policies, have somebody go through them and just review them, because what was good for you 2 years ago isn't necessarily good for you now. And there can be some places where you can cut. There can be some gaps that you need to know about, because at the end of the day, insurance is about transferring risk. You need to understand the risk first. And if you want to expose yourself to that risk, you certainly have that ability in that prerogative, but you got to know the risk before you can decide if you're going to absorb it or transfer it. So it's a great industry. There's a lot of great people in the industry. I think it gets a bad rap because of, the war on drugs in the 90s, and then what spirals into that. And cannabis is here to stay. And I think it's going to be, now that the market has settled down a little bit, I think you're going to see a lot more M&A, and I think you're going to see the strong survive like in any market.
Yeah, that's certainly what we've been seeing here. Pete Vredeveld with OVD Insurance, thank you very much again.
Lance, thank you again for inviting me, and I thank all your listeners for listening to this exciting presentation on insurance. I can be reached at Pete V, as in Victor, at ovdinsurance.com. You can reach me there. Any questions, any concerns, and look forward to speaking with anybody.
That's it for today, and thank you for joining. As always, you can find us by searching A Higher Law wherever you get your podcasts. I'm Lance Bouldry, and we look forward to seeing you next time on A Higher Law.